When it comes to the current Calgary real estate market, there are some serious mixed results when it comes to how you're feeling out there. Today, we're going to be diving into the economic development forecast that happened, some of the big takeaways there, as well as talking about some of the charts and what's going on in the Calgary real estate market. It's November and we're kind of nearing the end of this year. So where are we at? What does this look like? Well, let's take a look. So we had the pleasure of being invited by ATB to come to the Calgary Economic Development Forecast. And it was a great time, a great afternoon, some great speakers, and some of the biggest takeaways that we had in this meeting. The first one is that Calgary and Alberta are expected to benefit from record population growth with strong commodity prices and consumer spending in 2024. The other thing is there are some serious economic headwinds. I feel like I'm using big words today, but serious economic headwinds that are anticipated to have a dampening effect on the Canadian economy. However, Alberta is going to fare a little bit better than these other ones. So Stephen Poles was one of the speakers, and he had a great analogy. It feels like our head is in the oven while our feet are in the freezer. And it's kind of really hard to know exactly where things are gonna land. He also said, with a robust resource sector, diverse industries, and a talented workforce, Alberta is in an enviable position. I mean, we kind of are leading the country over the next little bit, couple years, whatever that is, and we kind of have an enviable position, which is kind of exciting and kind of different for Alberta given the last decade or so of where our economy has been. And next we have Mark Parsons, who is the VP and Chief Economist at ATB, and he had some really great, insightful observations about our economy. And the first thing that he says is he believes that the Bank of Canada should actually start taking a sideline and sitting on the bench and waiting for what they have done to actually take effect. I completely agree. If we start seeing more interest rates increases, that is going to put our economy in a harder position, especially those not in Alberta, because we have, again, that enviable position that we are in. And so he believes that this is an appropriate time for the Bank of Canada just basically to sit on the sidelines. He also said that while Calgary and Alberta are traditionally known for their oil and gas industry, Calgary's tech sector is growing like crazy. So there was two charts that you'll see, and according to PitchBook, Calgary is ranked 12th among the top 20 high-tech global growth locations across the whole world. 12th out of 20. Out of the whole world. That is very, very impressive. Additionally, Calgary is ranking second in North America for the tech talent workforce growth, which is actually just behind Vancouver. And that's a great location for us to be as we continue to grow this sector of our economy here in Calgary. He also highlighted that over the last year, we had 184,000 individuals move to Alberta. And it actually forecasts in the little chart, he didn't say this, but if you read the chart, it forecasts another 200,000 plus individuals coming to Alberta over the next 2 years. What do you think that's gonna do to our market, our real estate market? I mean, we'll talk about that in a little bit, but what do you think it's gonna be? And much of this growth is attributed to Ontario and British Columbia and those individuals moving here, because 73% of the interprovincial migrants came from these two areas over the last year. And lastly, he talked about with the increase in population, it's forecasted that we are going to have a greater number of homes being built next year than we are seeing happening this year, which is kind of needed. I mean, we do need a lot more new homes being built. And if you remember in one of our last videos, we talked about we have 9.1 individuals moving to Alberta for every new home that's being built. There's just not enough homes being built. And if you want to learn about that, you can jump up to the card and watch that video. But after this one, stay here. You don't need to go anywhere. So what is going on in the Calgary real estate market? As you can see on the charts, the benchmark price, it's still climbing. Last month, we saw a decrease from the summer, but this month we saw a slight increase. That was about $1,000 or so. So it's roughly the same. But what we are seeing is the number of inventory versus sales. Sales have dropped compared to last month, but they're still on a high, which I'll get into here shortly. The other thing is our sales by price range. So I'm going to walk through the whole market, sales by price range, and then follow that up by looking at the actual months of supply by price range. So we're going to go through all of the different product types really quickly so you can get an understanding of where things are at tied to the price ranges inside those product types. So overall in the whole city, you can see, you got to look at the blue lines because that is 2023. So the number of sales has really increased in the 700 to a million price range compared to years prior, and same with 600 to 700. And so when you look at the months of inventory, it is really low in anything under 700,000, but we actually jump quite high above 2 months of inventory. So when we hit 2 months of inventory, we are sitting in more of a balanced market. And when you cross this 4 months of inventory line, that means we are in a buyer's market. So products that are priced over $1 million in Calgary are above the line, which means it's actually in a buyer's market, even though the whole city is sitting in a strong seller's market. And like I just said, the whole city is sitting in a strong seller's market because we're sitting at roughly 1.47 or 1.48, I believe, is the number, which is slightly up from last month, but it's still in a strong seller's market. When all product types, when you don't have them broken out by price ranges, they're also all in a strong seller's market as well. When we look at the number of sales per month and what's happening there, we still are sitting on the high end when you compare it to the last decade or so. The only year that is beating us out is 2021 by I think about 13 sales. So we are nearly at record highs in terms of the number of sales that happened for the month of October. And with that comes with the number of listings. We still have a high number of listings that are coming to the market. And ultimately, this is the story of this year, is high number of sales, a decent high number of listings, but when they get eaten up so quickly, it leaves us with a low number of inventory. And that's still what we are seeing. Like this black line along the bottom from this year, I mean, it's just bottom. Like it's so low. So I want to remind you, you can go into the description below. You can get our full market report where we have way more charts as well as all the other sub-cities around, Airdrie, Cochrane, and so on. So go down there. If you like data, you're going to love this report. So let's jump into detached properties. So detached properties did see a slight increase. And when you actually start looking at the price range and the data, when you break it down, the number of sales has drastically increased over the last 4 years when you look between 700 and a million. It also has increased a lot between 600 to 700, and we're actually lower on anything else below. And that's because prices have jumped up over the last number of years. But when we look at months of inventory, it's a little bit of a different story because everything down under 700 is pretty much at 1.5 or less. Detached properties between 400,000 and 500,000 have a half month of inventory. So if you're trying to find a detached home under $500,000, if something gets listed, it's everything, not something. Everything will be new in 2 weeks. It is turning over that quickly. However, when you jump into 700 to a million range right here, you're actually sitting at a 2-month absorption rate. So you're just flirting with the balanced market. So if you try or finding something between 7 and a million, there's going to be a few more options for you, but it's still going to turn over fairly quickly because it's flirting with that seller's market. And then if you jump to over $1 million, it easily is over 4 months of inventory when it comes to detached properties. Now, if we look at semi-detached, there's a lot less of these in the city than detached homes, but the prices are still going up. We saw an increase from last month, and we're also seeing majority of the properties selling between 400 to 500. So this is going to be more of your attached duplex, right? Your older 80s, 70s attached duplex type stuff is going to be in that 400, 500 price range. But when you get above 700, this is going to be your infills, your new infills, knockdown, new builds, that kind of thing. But the inventory, if you look in 2020, October, We were sitting at 16 months of inventory for this product type, over $1 million, where we are actually sitting at 4 months right now. So that kind of makes this chart look kind of skewed. But anything between 2 and 4 is a balance. Down here is sellers, up here is buyers. So 700 to 900 is easily in a balanced market where everything else is sitting in a seller's market. Hope you're finding this helpful because there's a lot of data. So townhomes and apartments. There is a lot of stuff, a lot of things moving right now. There's a lot of potential and a lot of opportunity in these two different product types. And again, you can clearly see prices are still on the rise when it comes to that. But what I always find very interesting, what happened this year with townhomes, is the number of inventory and number of sales has been inverted for quite a number of months. And so when you look at, this is drastic, when you look at the $400,000 to $500,000 range for townhomes, I mean, we went from 40 sales last year to 140 sales this year in that price range, where last year there was 140 sales between 300 to 400, but that's all shifted up. So you can clearly see prices have risen when it comes to that. And when you look at the months of inventory, again, your biggest one is going to be over $1 million. You got 10 months of inventory for $1 million plus townhomes, which there's not very many of them. I mean, like you can see here, like maybe one sale last month. Kind of, again, it skews this chart, so it's hard to read it, but 700 to 900 is over 5. This is probably all sitting at 2 months or less. So it's all kind of sitting in a seller's market when it comes to that. Now, the almighty apartment, the rising apartment product. This is something that is changing in our market, and it's becoming something that is a lot more sought after than we've ever seen. And so as you can see, again, prices are on the rise. There is a little bit of gap of inventory that is being created based on the number of sales, but not a lot. And here's what I mean. Between $300,000 to $400,000, there was over 200 sales last month in that price range, where this time last year, there was probably roughly 70 to 80, somewhere in there, 85, something like that. So that price point has way more sales than it has seen last year. And the biggest price point is between 200 to 300. It's probably close to 280 sales last month, just in condos priced between $200,000 to $300,000. And then if you're looking at months of inventory, the only price range that's probably moving into a balanced market and above is right around here, the $500,000 to $600,000 range, and up is moving into more of a balanced and even a seller's market, or a buyer's market, I should say, where it's favor of the buyer, where everything else under $500,000 really is sitting kind of still in that seller's market. And so if you're finding this video helpful and you want to know more stats, more things, jump up here and we'll see you in that video.